We got some great news for Rivian stock investors today as the company reported its quarterly and annual production and delivery numbers. Those figures sent the stock price soaring by over 22% as of this recording on the day of the announcement. So, what was so great about the numbers that sent the stock price higher? That's the question I'll answer in this video. I'll review the details of the announcement and highlight the big thing that sent the stock price soaring. Let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
You can see the price action of Rivian stock this morning up over 22% on the announcement. I'm happy to see this for Rivian stock investors as the stock price is down over 90% off its highs, and many Rivian stock investors have lost significant sums of money on this struggling EV company. So it's nice to see some good news for Rivian stock investors to help recoup some of those losses if you've been a long-time Rivian investor. Let's take a look at the thing that sent the stock price higher. So the company reported on a full year basis that it produced 49,500 vehicles and delivered 51,500 vehicles. These figures were in line with management's guidance. They were forecasting that they're going to produce about 48,000 vehicles at the midpoint, and they actually produced above that. And they said they were going to deliver about 51,500 vehicles at the midpoint, and they delivered the numbers that they forecasted. Rivian has been good with delivering on what they forecast. It's kind of the opposite of another electric vehicle company that we all know of, where that company's management team gives you these ambitious targets and fails to meet them over and over and over again. So it's a breath of fresh air to see an EV company with a management team that delivers on their forecasts. In addition, the previously discussed shortage of a shared component on the R1 and RCV platforms is no longer a constraint on Rivian's production. And this is precisely the news that sent the stock price soaring. It wasn't that the company hit their targets, right? Usually hitting your targets doesn't send your stock price higher by 22% unless there's so much doubt that you're going to be able to meet those targets. And then when you meet them, it's a relief rally. In this case, the bigger part of the news was that the shortage that management reported on in the previous quarter has eased. And another indication here, Rivian's been working hard to change the inputs on their vehicles, right? You've probably all heard of the massive losses on the bottom line that Rivian generates, and let me share that with you. In the most recent quarter, the company generated $874 million in revenue and lost $1.2 billion on the bottom line, loss from operations. In the same quarter last year that ended September 30th, they lost $1.44 billion in operations. For the 9 months that ended September 30th, they lost $4 billion in operations. That was a very minor improvement from the loss of $4.16 billion in the 9 months in 2023. So the company's been working hard to change the inputs in the vehicles to fewer inputs at lower prices so that they can reduce the cost of revenues so that they can improve profitability, because you can see their biggest cost is cost of revenues here at $4.6 billion in the 9 months ended September 30th, up from $4.5 billion in the same time last year. And this is especially troubling because it's hard to scale in these costs because they're variable costs. With each car that they make or with each car that they sell, they have to have those costs. It's not like a business where you spend a lot of the money up front and then with each customer, it helps recoup some of that cost because you're not spending money on a new customer. I like to give Netflix as an example of that kind of business where you spend money on the content, but then when you get a new customer, you don't have to spend more money on content. And so with each new customer that you get, it improves your profitability because you already spent the money on the content and then a new customer doesn't require more spending. It's the opposite of Rivian. Every new customer that Rivian gets, they have to spend tens of thousands of dollars for the inputs for making the car. Okay, so that's what makes this business so difficult That's why for years I've been saying I don't like car companies, and especially don't like electric vehicle companies that are losing so much money on the bottom line, where demand is not increasing by all that much. And so it's difficult to grow quickly enough so that at least when you're growing very quickly, you can improve on some of these cost of revenues. Because if you're buying, let's say, 10,000 tires, you're going to get quoted a certain price for each tire. But if you buy 500,000 tires, you can negotiate maybe a lower price per tire, right? And you can imagine that across all of your inputs that you're buying. But when your sales are flat, essentially, right, 3.2 billion in revenue in the 9 months, 3.1 billion in revenue in the 9 months in the prior year, you're not scaling. So the only other way to improve your margins is to really work hard at changing the inputs in the vehicle. Maybe if you're buying from a certain supplier, you change to another supplier that might give you a better deal. Or maybe if you're buying higher quality products, you try to change to lower quality products in areas that you hope your customers won't notice, and thereby reduce your cost of revenue. So that's where Rivian's been working really hard. And I think that's where the troubles arose in the previous quarter, where they had those issues with a shortage of a component. And this primarily, I think the reason why this happened is because they've been working so hard making those changes and adjustments to try and get production costs down. And so by Rivian now saying that they fixed that problem, it convinces investors, it gives investors one more data point that Rivian's management team is effective in their shifts and strategy. They're able to change things, they're able to make adjustments, and when a problem arises, they're able to relatively quickly fix it, right? It doesn't linger on for several quarters and lead to a whole disaster, right? And I've been saying that with Rivian's management team, they've been extremely competent and capable. The reason why I haven't recommended Rivian stock as a buy is because the business that they're in, they're trying to build an electric vehicle business. And, you know, with me and car companies, I dislike car companies, and especially electric vehicle companies, because it's so difficult for the reasons I highlighted. And I only highlighted like one of the reasons why running a car company is difficult, or profiting from a car company is difficult. I've over the years gone through a myriad of factors on why it's so difficult to earn solid returns on a car company. Nevertheless, if you ignore the industry factors and you just look at company specific, I think Rivian's done an excellent job. I think management has been really good at dealing with these difficulties, dealing with the challenges, dealing with the industry that's not growing anywhere near they expected, and adjusting to the reality on the ground and running the business based on what's happening right now, not based on what they thought was going to happen back in 2019 and 2020. So great news for Rivian stock investors. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.